153,000 jobs created in the month of January. Expectations were for 185. Just a barn burner number. We're going to talk about that. We're also going to talk about a rolling recession. Yes, folks, we're doing a special edition Friday daily financial news. We're doing it outside. It is kind of wet and yucky, but the jobs number was so important, I thought we should give you a quick rundown. So what happened? Expectations again for 185. I was expecting something about that to 200. It came in at 353. This is just more sign that the jobs market is stronger than expected. Jobs created in professional services up 74,000, healthcare big number. Steady. Also, I think this is another validation that a March rate cut has to come off the table. I don't know how you cut in March when you're creating 353,000. Also, for all the doomers out there, last month was revised up. Yes, folks, there was a talk track that 10 out of the last 11 months were revised down. Last month was revised up. It was revised up in quite a big way. It was revised up to 216,000. The unemployment rate was expected to go up to 3.8. It stayed flat at 3.7. We are there for 3 months in a row. Just a good number. I want to talk about the rolling recession. This is something we haven't talked about in a while, but I'm now starting to see evidence that a rolling recession is actually happening right now. So follow me on this. We've been talking about housing market being at depression level transactions, right? We went from 6 million to 4 million, right? We went down, I don't know, whatever that is, 33%. Also home building down, right? Housing as a part of GDP was a negative driver for 6 to 8 quarters. I believe that is turning around right now. Why do I say that? Well, you've probably heard me talk with mortgage brokers, right? We have 3 of them on the channel every week, and their industry was getting decimated. By some accounts, 50 to 60% of folks in the mortgage business are gone. That is depression level job loss. But what happened this week? I talked to multiple brokers, multiple. They are hiring. I talked with Dustin from Convoy Home Loans, whose video I think comes out today, might be tomorrow. He said, Michael, we did something last week that we haven't done since 2021. They hired 3 people. Now, again, 3 people is not going to move the needle, but what is important is if we are going to have a rolling recession, the industries that will hit hardest, i.e. housing, by an increase of 525 basis points in the Fed funds and mortgage rates, right, to 8%, they would come back first. Now, it is way too early to tell. Maybe if you or someone else in the mortgage or real estate industry are seeing similar or different data, let me know. But it does look like a rolling recession might be happening right now. And that means different industries go in and out while GDP stays relatively flat, right? The other thing that we have to realize is manufacturing. Again, manufacturing went into a recession. We got the PMI data for manufacturing yesterday. Let me find it. It was at 47. Again, these numbers, don't get twisted on the numbers. Just understand what they're telling us in the trend. Anything below 50 is contraction, right? You're shrinking. We had been below 50 for several months. We actually ticked up to 49.1, so still restrictive, but trending in the right direction. Also above expectations. So again, not yet over 50, but more evidence that a rolling recession, which is something we haven't had since maybe the 90s, is actually something else to talk about. This is wild. This is so wild. Inflation. So Trueflation is a website you can go to, and I recommend you do that. Trueflation has been a more accurate indicator on inflation the last several quarters than the experts. So what is Trueflation saying today? Trueflation today, oh, we got a raindrop on the, there we go. Sorry, we got a raindrop on the camera, and that's not going to do very good. Let's see if I can clean it up. This is what happens when you do it outside. Let's see. I'm sorry, this is live and crazy, but hey, let's see what happens. All right. Sorry for that, but what are you going to do? So go to Trueflation, check it out. Trueflation now is saying 1.34. 1.34. The government's last reading was 3.4. Remember, the goal of inflation is below 2. Just in case you need some help, 1 is below 2. Wild. Go look at the data yourself. It is pretty impressive. Wanting to talk about housing, another example of the crazy housing market. Again, I really do think what we've been talking about for a year now, below the median and above the median, the markets are different. The affordability, the lock-in, all of that stuff happening at the low end is nuts. Here's just another example I got yesterday. So, San Jose, California, the Bay Area, the tech center, Silicon Valley. There was an 1,100 square foot, 3-bedroom, 1-bath listed that had to be 80 or 90 years old. It was listed below the median. It was listed at $799. Folks, 28 offers, 2 all cash. One of the offers, a buddy of mine, wrote an offer for $915. $915 and did not get it. $799, $915, 28 offers, 2 all cash. He didn't get it at $915. Don't tell me below the median is not the hottest spot in the market. Wells Fargo. Wells Fargo is predicting 5 rate cuts this year by the end of 2024. Remember these rate cuts, folks. When they talk about 5 or 6, they are referring to 5 or 6 quarter point cuts. So if the Fed were to go down 50 basis points, that would count as 2, just so you are aware. Bank of America is talking about rate cuts in March or May. It doesn't matter as long as the 6 rate cuts coming. I got to tell you, I think a March rate cut at this point has to be off the table. But again, you don't know, right? Inflation below 2, strong draw. It's wild. We can't cut rates in March when we're creating 350,000 jobs. It just can't happen. It just can't happen. We did get a bunch of earnings yesterday. Meta beat top bottom, established a 50-cent dividend for the first time, and a $50 billion stock buyback. Amazon beat top line, beat bottom line. Revenue up 14%. U.S. consumers are strong. Apple beat top line, bottom line. Big miss in China. Once again, folks, Starbucks is our early indication about the Chinese consumer. Once again, Starbucks told us what was coming with Apple. iPhone did beat. What else do I got? Oh, I want to catch you up on a conversation with Lance Lambert from Resi Club yesterday. The video is already posted. I think it went out at 4 o'clock yesterday. But during that discussion, we talked about Billionaire Barry's $1.8 trillion collapse, or no, $1.2 trillion collapse in commercial real estate. And Lance correctly identified where that $1.2 trillion went. Folks, think about it. What happened during the pandemic? Office, work from home, all of that. So what we effectively did, and this again, full credit to Lance, I completely missed it. I think it was a genius recognition. The equity from office went to single family homes, aka residential. What have we seen over the last 2 or 3 years? Residential up, 20, 30, 40%? So I think he's right. I think what we did, given the lockdowns and work from home and work remote and all of that, is we've taken the equity from office, we've lowered their value by $1 trillion, and we threw it on top of residential. So if you took action, if you happen to be a homeowner, you are winning. If you happen to be a renter, unfortunately, the story is not the same. So again, folks, blowout jobs number 353. I have no idea why anybody thinks we need a March rate cut. It doesn't make sense. The 10-year note, I think, bounced to 4% today. My hope is we have mortgage rates between 6 and 7 all year. We need time to clean this up. So take care, everyone. Sorry about that raindrop earlier. What are you going to do? Bye.